Hi, this is Steve Sanders with First Financial Services with another edition of Opening Doors, where we like to share some insights into what's going on in financial markets and how it affects the things we're doing on a day-to-day basis. So we've had a lot of questions recently on how presidential elections impact stocks. And the short answer is they really have a limited impact. Historically, stocks have risen in election years during both Democratic and Republican administrations. Presidents tend to inherit an economy, and healthy economic conditions are the most important driver of stock market returns. There are certainly policy and legislative changes that can affect certain segments and, in some cases, broadly affect the market. And we'll talk about a few of those in a minute. The best scenario for the stock market, and this is common sense, is an improving economy and falling inflation. Uh, I would say right now we have a hybrid of that. We have an economy that still seems healthy, but it's definitely slowing. And we have inflation that's falling, which is certainly positive. So, not clearly on this chart, but generally, falling inflation and a solid economy would be positive for stocks. If you look at how the market has performed during presidential election years versus during non-presidential election years, there is a difference, but we wouldn't say it's that significant. You see the blue box on the left side there is 11% during a presidential election year is the average annual return, and it's 11.6% during a non-presidential election year. So the bottom line is it's the economy, not the presidential election, that generally drives stocks. Now, in 13 of the last 24 elections, the incumbent party won. There was only one time that the incumbent party won when we were in a recession, and that was in 1948. In 70% of the elections that the incumbent lost, we weren't actually in a recession, but we were in a recession within 12 months. So, as you would expect, people tend to vote based on their personal situation and the outlook for their own individual economic conditions. And we don't expect this to be any different. So, when you layer in the control of Congress, again, it tells a similar story. The best scenario, whether it's a Democrat or Republican in Congress, is a divided Congress. And that's generally because you don't see a lot of massive policy changes or shifts during that time. And corporations and investors kind of like certainty. They don't like the rules to be changed in a significant way. So we have seen in the past couple of years instances where legislation did significantly impact the stock market. We saw a substantial corporate tax cut in 2017, and it certainly wasn't responsible for the entire 19% gain in the S&P 500 that year, but it definitely was a contributor to that. And then we saw in 20 and 21 several large COVID-related stimulus programs that certainly helped the consumer spending side of the economy, which is about 65% of our economy. So there were a few examples where there was no question that legislation had a positive impact on the economy, but generally legislation is not the primary driver of the economy or markets. So as we've kind of watched the political wind shift over the past several months, we do see subsectors of the market reacting to the favorite on the Democrat or Republican side. So clearly, when the Democrats look like they have the edge, you see things like renewables catch a stronger bid, and you might see traditional energy get a little bit soft. Both sides have been aggressive in trying to bring down healthcare stocks, and that's really weighed on that sector for the last several years. And we use the term rhetoric here because it's very likely, regardless of the outcome of the election for the president and Congress, that you're going to have a very close margin in Congress either way. And that makes it very difficult to have massive policy changes. So Wall Street likes gridlock. We would just encourage you not to change your investment strategy or do anything out of the ordinary because of what you don't do or do not expect coming out of this election. So thanks again for taking the time to listen, and we look forward to talking to you again on Opening Doors.